loan is less than $10,000, then no tax update. Capital gains only come into play if it is a capital asset. One Bitcoin is worth $39,984.70 in US dollars. Ask Roger. Hey guys, I'm Roger Herring. I'm the Investor's Accountant, and thank you for coming by our YouTube channel. Before you leave today, be sure you hit subscribe and click the bell. That way you won't miss any of our free educational videos. Hey everyone, I'm Roger Herring. I am the Investor's Accountant. Welcome to another edition of Ask Roger. This is where you get to ask me a question about real estate investing, real estate taxes, how to keep your money out of the hands of the IRS, how to build wealth, and how to do it tax-free. Those are our favorite subjects around here. So today, I got a question from Micah. And Micah wants to know, how much can I get into a 401k this year? I am a solopreneur. I have no employees. All right, here we go. I love this question, Micah, because you know what? We love to build wealth. And in order to build wealth, the more of our money that we keep and don't give to Uncle Sam means more we can invest. And if we use a Roth 401k and a Roth IRA, Uncle Sam's never going to get a bite. That's a tax-free environment. So today, I'm going to teach you a concept called the Mega Roth. That's right. In fact, using the Mega Roth between the solo 401k and a Roth IRA. If you're under 50, you can get $72,500 in contributions in this year. And if you're like me, you're over 50, guess what? That goes up to 85 grand. Oh, I'm sorry, 81 grand, not 85, $81,000. That's the max this year. I got a little too excited there. So I'm going to draw this out for you on the whiteboard. So let me bring my tablet online and let's start working this out. All right. So there are multiple steps to doing this. So let's go one at a time. Number one, I am going to fund a Roth IRA. And if I am under 50, I can put $6,500 in. If I'm over 50, I can do $7,500. That's the first step. But Roger, I make too much money. I don't qualify to be able to contribute to a Roth. Yeah, you do, because there's a back door. What we do is we make an after-tax contribution to our traditional IRA, and then we immediately convert it to Roth. That's called a backdoor contribution. Now, if you've got traditional IRA funds, that might be a problem because that kind of creates some taxability there. So here's a better idea of how to do that. Before you do this, take those traditional IRA funds and move them to the traditional component of your solo K. That will open the back door. Now, you got to be profitable to make this happen. You got to have money because these are contributions you got to make. So now, as an employee of your S corporation or as the owner of your Schedule C business, you are allowed an employee contribution. How much is that employee contribution? And let's just put it in here, employee contribution. All right, if you are under, and let me just put it up here, under 50, and this is 50 plus. Oh, I see what I did right there. I went too high. All right, here we go. Now, my employee contribution. What am I going to do? If I am under 50, I can do $22,500. If I am over 50, I can do 30 grand. That's the employee's contribution. Now, because this is a solo K, I get a nice employer match. So let's just call this the ER match. And that is 25% of my W-2. So let's say that I pay myself $100,000 a year. That would be $25,000 because it's 25% of 100, and that applies to both cases. Okay. Now, let's do a little math. Right now, I have put in how much? I have put in $47,500 here. And over here, I've put in $55,000. My maximums are $66,000 into the solo K, or over 50, $73,500. So now I'm going to do step 4. Step 4 says I'm going to make an after tax contribution to traditional side of my 401k for the difference to come back to. So if I subtract 47.5 from the 66,000 match, that means I'm writing a check for $18,500. Over here, I subtract the 55,000, and that just so happens to come out to be also $18,500. I'm going to write a check, and I'm going to contribute it as an after-tax contribution to my traditional side, because that's allowed. And now I do step 5. 24 hours later, I'm going to convert that 18,500 to Roth. So now, gang, you've got on this side $66,000 into the Roth 401k, and you've got another $6,500 into a Roth IRA, giving you a total of $72,500. Now, over here, if you're over 50, $73,500 is what we just put in here. And my Roth IRA was $7,500, bringing me to $81,000. Pretty sweet, huh? Let me end the screen share and we'll wrap this up. Okay. So let's summarize. We want to do this wonderful thing called the Mega Roth. We can get a whole lot of money in. Now, Roger, what if I'm in a real high income bracket and I really need the deduction this year? Okay, if you need the deduction, do everything that's traditional. But you know what? After that, next year, you're going to be in a lower bracket because you've got a real big sale this year, and then next year, you're just coasting, you're back to normal. So next year, not only will you do a Mega Roth as a contribution, but you will convert everything that you did this year that went into traditional into Roth. That's how it works, guys. You got to keep your money to invest your money. So in the end, the Roth IRA and the Roth 401k, especially the solo K, they are keys to wealth building. It's been great being with you today. Until the next time, Roger out.